what I want to talk today is, I don't have a PowerPoint, anything like that. I just want to talk about one topic, and this topic is the Australian dollar. Okay, it has been quite funny since we started the week. All right, so at the beginning of the week, Australian dollar was quite strong. All right, we had, let's say, AUD US dollar, for instance. Oopsie, wrong one. So we had the start of the week quite strong. Okay, so we started the week on Monday, right here. Okay, so we started the week here on this sort of small candle here, Doji candle, as some people like to call, and we had that all the way up to pretty much 65. Okay, so that was kind of a big move in a sense, and interesting to see that all of that move has been giving it back in one single day. Okay, lots of you have maybe thinking, well, what's the reason for this? What's the reason for this whole move back down? And especially after 11:30, okay, especially after this candle here, everything started to be quicker, and quicker, you know, so faster and faster, and the market just keeps moving down. So what is going on with Australian dollar? So that's what I want to discuss today. But as usual, before we start the meeting, I need to put the risk disclaimer up. So I'm just getting it here. Oops, sorry, wrong one. I just need to put the risk disclaimer up and take this off. All right. I guess we need to look a little bit back when we had the RBA. Okay, so that was last week on Tuesday, if I'm not wrong, and lots of people always ask me, how can I get access to those type of releases, like private? Do I need to pay, or you know, is it something top secret that no one can know? And the simple answer is no. That's definitely not. And the simple answer is just type on Google. All right. So if you want to have a look, for instance, on the statement, you just type it up the bank, right? So let's say RBA, in this case, the Reserve Bank of Australia, and then you type rate. Oops, sorry. Rate statement. Okay. For this case, we want the statement. Once you press enter, you're gonna get the first link as the Reserve Bank of Australia. Okay, cool. But for what we need and what we got the release today, if we come up to FinLogic's economic calendar, we're pressing today. Let me just take these all the other ones off. So we had right here Australian RBA meeting minutes. Okay, this is one of the most important, I would say, documents that you can ask for a bank. Okay, because this is where we will be able to see every single word that they've talked about inside of the boarding meeting. And that being said, how can we get access to this? Again, it's very, very simple, and it's literally free. So you just type it up, RBA meeting. It's not here. Meeting minutes. There you go. Click enter, and then you're going to have the minutes of the monetary policy meeting of the board. But it goes for any other bank. Okay, so let's say the ECB meeting minutes. There you go. Monetary policy accounts. If you want to go for BOE, monetary policy summary in minutes, you know, you got everything. The Fed, of course, Fed meeting minutes, you know, meeting calendars and information. Once you click in there, you're going to be able to see that the last one was on May, and then you have the statement and you have the minutes. Okay, so every single, like January, March, May, all of them will have. The next one will be on the 17th or 18th, just depends where your time zone is for that, but it will be the minutes as well. Okay, so for what we want is this one. So the RBA, Reserve Bank of Australia. So let me just send this link into the chat. RBA meeting minutes. Okay, I've sent on the chat so you guys can go with me. But that's what have made the Australian dollar so weak today's session. Okay, do I think it's temporary? I guess in a sense. Okay, in a simple answer, yes, but on a long answer, it may be temporarily for now, in the next couple of days. But soon as we get anything related to Trump and China, we may have a relief of the selling pressure into the Australian dollar. Okay, and that's going to account for a lot of what has been talked about inside of the minutes of the monetary policy for the RBA. If you've watched my video on YouTube today, I've actually discussed about securities YouTube. Let me just get it here. Views right here. Okay, so you would be able to see that I've talked about a few things inside here. So for those who haven't watched the video yet, I'm going to send a link into the chat as well. All right, I've sent the link into the chat so you guys can watch that later on once we finish the webinar. Yeah, so coming back here, all right, so that's what it matters to us. All right, so just come to this page. I've sent the link into the chat. It's the first link I've sent, and click into the view the latest minutes. Okay, so this is basically a preview. So the Reserve Bank published minutes of the Monetary Policy Board meetings 2 weeks after each meeting. These meetings are held 8 times each year following the release of key economic data of inflation and economic activity. You have the schedules, of course. You can see when's going to be the next ones. And also, the meetings from October 2006 were also released. Anyway, so you can just click into minutes, and that's what we got. So that's the whole thing, all right? So that's the actual meeting minute. I know it's a really, really lot of content. And that's when we need to leverage the AI technology to our favor. For those who already know, ChatGPT is one. You can use Grok as well as another one. You can use, there's so many, you can use a bunch of other ones. For me, personally, I'm just going to use Grok into here. It's not we don't have partnership or anything like that, but it's just a way for us to, let me just delete this, a way for us to go quicker, okay? So there's a few things. If you just input this into the AI itself, it can give a resume to you, okay? But that's not what we really want. What we want is actionable topics, okay? And in a sense of there are certain prompts, certain prompts. When I mean prompts is things that you want to ask Grok or GPT, whatever AI language you're using, that will be giving you that right answer. Okay, so for this case, let me just write it down here. So topics to ask AI for the minutes. Okay, perfect. So the first thing is what did they decided? Okay. I know it sounds very clear, well, in this sense, RBA decided to cut the interest rates by 25 basis point. Okay, so that is 0.25%. So, but when you ask what they decided, sometimes it will give you a little bit more of a in-depth overview of what they actually did. Okay, so inside of the same question, we can ask, how is the geopolitical affecting geopolitical trade war affecting the Australia, also the inflation, consumer spending, and the growth. Okay, so this is one thing. Why is it so important for us to know that? Okay, I think there's a few people that haven't yet waken up. Okay, and what I mean by that is basically there are some people that haven't understand that the market they used to trade 2 years ago, it's not the same market they need to trade today. And when I say this is basically what has been done, this is it. Okay, it's not the same thing. Oh, interest rate's going to cut. Yeah, let's sell that currency. Well, not quite, because we did had a cut into the New Zealand dollar, for instance, and the New Zealand dollar, it's very strong. So how can you explain me this? So if we go, for instance, on like Euro NZD has been a pretty big option to short, like here. Look at this, quite big moves down. Okay, much more aggressive moves down than aggressive moves up, right? So these are the type of things. Otherwise, Aussie New Zealand is a good short as well. Okay, strong moves down. Euro AUD has been quite of a tricky one, but I would say a short position somewhere around those levels would be kind of great. Anyway, so coming back to this page, so this is the first question you need to ask, all right? So let me just type. Okay. Oh gosh. Okay, so that's the first question. Second question would be, what is the forward look for the rates into the central bank, from the central bank, sorry. From the central bank, or we can just say from RBA in this case, or if it's the Fed, from the Fed, from BOE, from ECB, etc., etc. Okay, and what is that so important? Because this is forward guidance. Okay, so right afterwards, you can ask, how is the forward guidance being made? Explain to me in a dovish, neutral, or hawkish sense. Also, are they more data dependent than lean towards one side? Okay, so that's a really, I think that would be one of the important questions to have, because if we don't have any type of forward guidance, like a neutral sort of aspect, that wouldn't change the market trajectory. Okay, if we do have forward guidance, what is the forward guidance? All right, so first of all, forward guidance is when a central bank or a chairman from the central bank itself have a say that this is what's going to happen from now on. Okay. If we have someone saying, yeah, we will continue to cut, that's a very dovish forward guidance. We will be data dependent. We need to check inflation, labor market, unemployment rates. That's a neutral. We are able to maintain the rates for higher. And for this, that. So that's hawkish. Okay, so there's always a way that the central bank likes to communicate and make the path more clear for the society. All right. So yeah, that's pretty much what is forward guidance. All right, and the last question that I would definitely ask is, sorry guys, let me just stop the sharing and get my Teams out. Perfect. All right. Let me share my screen back. Okay. Oh no. Everything is out. Anyways, so I'm gonna just type it over in there. Okay. And the last thing, it's what are the inflation? Let me type it up. The third thing is, how is the inflation guide? Oopsie, sorry. How is the inflation guide has been changed from the last meeting? Not only inflation, but also GDP, labor market, market, and etc. Okay, labor market, etc. So this is a very, very good question. Why? It's just going to show us what has been the last projection. So the last projection for the growth has been at 2%. And how is the projection now on today? Oh, it's 1.5%. Oh, wait a minute. We have a 1%. We have a half percentage decline. So that is a problem. Okay. And why? Because they were more confident that we would have growth, and now they're looking like they're not that confident anymore. So that's a problem. And for this reason, that's what we should be looking for, short maybe the currency. But of course, it will depend. Maybe they're looking for lower GDP because the whole economy is looking for lower GDP. It's the whole context, okay? It's not only one thing. That's what I say. The context can change everything, because if the RBA is expecting a lower GDP, it doesn't mean that it's only them. If the whole economy now is expecting a lower GDP because of the trade war, okay? So these are the types of questions we should be asking ourselves. Now, of course, you can use AI if you want, but if you don't want, you can just go over and read all of these. It's definitely a really, really good thing to be done, okay? So how can we now ask all of those questions? Basically, I'm just going to copy everything, okay? I'm going to copy everything to here, and then copy and come back, and then I'm going to come to Grok, and I'm just going to type, hey, you are my analyst, and I need you to do a few things with the latest RBA meeting minutes from June, released on today. So today date is the 3rd of June 2025. Okay. So now we ask him, first thing, what was the decision? And then we just type it over again. I don't know why I forgot that I've stopped sharing my screen. I would have to write everything. But anyways, what was the decision? Are they more lean towards continue to cut, hike, or neutral? Neutral. Second question, I'm just going to use this one. Grab this. Okay. And that should be fine. So I'm just going to copy this again, and then here, and send it. So right now we already have a few, let me just take this off. We already have a few things that he's writing for us. And I think that's really, really important. Okay. Leveraging the technology into trading right now is really, really great. So just let's have a look in here. Right? In summary, compared to the February 2025 meeting, the RBA forecast reflects a slightly weaker outlook for GDP growth and a slightly higher unemployment rate. That's really bad. Okay. Of course, as I explained, the outlook for the GDP being weak, it's not a bad thing because the whole economy, all of the economies around the world is expecting a weaker GDP. Okay. But a slightly higher unemployment rate, so that means that there will be more people unemployed. And of course, this is a drag effect for the weaker outlook for the GDP also. That's really bad, okay? So, and then it explains, driven by global trade disruptions and softer domestic consumption. Inflation forecast at slightly lower, so that's pretty cool. Okay, the forecast for the inflation is lower, with underlying inflation expected to remain within the target range. So the target range in RBA is 2 to 3%. It's very easy to find out what's the central bank target range for the inflation. So let's say you are on instance for the RBA. So RBA target range inflation, and it will pop up. Okay, so in this case is 2 to 3%. But let's say we have a look into the Fed. Fed is between 2%. If you want to look at the ECB is 2% as well. Everything you want is on Google. Okay, so that's the first thing you need to know. Anyway, so with underlying inflation expected to remain within the target range. To headline inflation may spike temporarily due to energy rebates. Okay, so for those who are not from Australia, the government did have a rebate for the energy to help the society. So it was giving like I think it was like $100 or $60 quarterly. So every month when your energy was like, let's say it's $60 quarterly, $6 quarterly. So divided by 3, it's $20. So let's say your energy came in to be $120 on that month. The government will pay $20 and you will pay $100. Okay, so that was pretty much what they did. The RBA cautions approach to further rate cuts reflects uncertainties around global trade policies, domestic demands, and potential inflationary pressures from supply chain issues. Okay. Now, I think it's much better to read, to not read all of this and to be able to just read this. Okay. So let's go. What is the decision? So the RBA decided to lower the cash rate target by 25 basis points to 3.85%. Are they more lean towards cautions to cut, hike, or neutral? The RBA appears to be leaning towards further cuts. So that's very dovish. And that's the reason why the Australian dollar has been weakening so much. That's already why, let's say, AUD dollar is going down so quick, because this is what has made the market to sell the Australian dollar. Oh, okay. If they are leaning to cut further, I don't want to put my money there. There's no sense for me to keep my money into that. Okay. And that's the reason. cautioned. The decision to lower the cash rate by 25 basis points was driven by progress in reducing inflation to 2 to 3% target range, a slightly softer domestic consumption outlook, and downside risks from global trade policy uncertainty. Market expectations, as noted in the minutes, align with around 325 basis points reduction in 2025. So everyone was sort of, in a sense, unexpecting these. Okay, I'm gonna be honest, because I'm in Australia and I can tell you that. So everyone was like, "Oh, will the RBA cut? Won't the RBA cut? What they're gonna do? Shall we, buy a house or not?" Well, as they say, as noted in the minutes, align with around 325 basis point reductions in 2025. So there's maybe, I'm not too sure if they mean another three or if they mean a full three base cuts into 2025. Because if it's a full base cut, they done two already. So there's only one left. If they mean another three, then it's another thing. Okay. So suggesting a continued easing bias. However, the RBA emphasizes cautions and data-dependent approach, so they are data-dependent approach, noting uncertainties such as potential inflation pressures from global supply chain disruptions and tightenings in the labor market. They explicitly stated that the monetary policy is not yet moving to an expansionary stance, indicating a preference for gradual easing rather than aggressive cuts or hikes. Okay. So they're not going to do a 50 basis points cut. Okay, so they're not going to have a surprise. The RBA is expected to cut 25 and then they come in and cut 50. So we already can forget about having surprises into the meetings. Okay, they're more towards soft cuts or no hikes. Okay, so as it says here, preference for gradual easing rather than aggressive cuts or hikes. So they're not going to hike. So they're really, really not. There's nothing hawkish. All right. It's basically neutral to dovish. So this helps heaps. It helps so much because that release was at 11:30. Okay. So let's say in a 5-minute chart, 11:30 was right here. You even had time, okay? Because at 11:30 the market went up, okay? And then after you're reading all of these, because as a trader you would have the questions already here and you would just be waiting into the page and refreshing the page like this, okay? Like, you would just be waiting until 11:30 a.m. In Australia, but just depends where you are around the world, and you would be giving refresh and then waiting and then waiting and then refresh again and then refresh again. Okay, 11:30, get it. And then you click here, go in, copy everything, everything you can faster as possible, go into copy, come here. The questions will be here, Control F, Control V, and send. And then you're going to have your answers in less than 1 second. Okay. So that's exactly what I mean. Leverage technology into your favor because, look at here. You would take at least 5 minutes to have everything done. Your entry point would be somewhere around here. You would have literally bare to minimum drawdown to a huge potential of gain. Huge. All right. So we're talking about 32 pips, right? So 326 points, coming close to 35 pips, okay? And you would be like maybe taking partial profits on here, a bit of consolidation, and then another down move, okay? So that's what I mean by leveraging AI technology. Now, second, how was the inflation guide changed from the last meeting, including GDP, labor market, etc.? So the minutes provided detailed comparison of the economic outlook and forecast relative to the previous meeting. Below is a summary changes in the key economic indicators. So there were changes, first of all, and that's really good already, okay? So the inflation, the current status, underlying inflation has returned to the 2 to 3% target range, with 6-month annualized terms at the midpoint of 2.5%. Headline CPI inflation was unchanged at 2.4 in the year, and the terms in the March quarter influenced by a government cost of living relief measure. So that's it. Okay, that's what is going on at the moment. Now, the change from the last meeting is that the forecast for underlying inflation is slightly lower than in the February. Okay, so the last meeting they had was February. So February, March, Jan, Feb, March, April, May, June. So from now, they expect to remain around the midpoint of 2 to 3% range to the forecast period. This reflects a combination of weaker global demand due to trade policy developments and domestic data showing softer consumption momentum. Headline CPI inflation is expected to be more volatile due to energy rebates, potentially exceeding the target range in early 2026. Okay. Key influences: global trade tensions, as we already know, the US tariffs, are seen more likely to exert downward pressure on inflation in Australia. To weaker global demand to supply chain disruptions could pose upside risks. The GDP growth, current status. The GDP growth increased in December 2024 quarter, with year-end growth picking up slightly in the March 2025 quarter. However, household consumption growth in early 2025 was slightly weaker than anticipated. Change from the last meeting, the baseline forecast for GDP growth is now expected to pick up less rapidly than projected in February. This downgrade reflects weaker global demand for Australian exports due to high tariffs, potential dampening of domestic investment in household spending from heightened global policy uncertainty, and a slightly weaker near-term consumption momentum. The offset is basically that the technical assumption of a lower cash rate path provides some support to domestic activity, but the overall growth outlook is less optimistic than previously forecast. We have the labor market as well, that we already know that they are expecting a slightly larger unemployment rate than before. And of course, that reflects the weaker GDP growth outlook because there's less people working, so there are less people producing. And if there is less production, there is less growth. Spare capacity, global context. Of course, we always need to look for the global context. And then in summary, already wrote. So this is what let me just drink some water, guys. Okay, so that's exactly the time to first chunk, time to first token, and response time is literally 1.6 seconds. You would have this answer in 1.6 seconds. And just reading this, we already know. Okay, weaker outlook, that's really bad. High unemployment, that's really bad. Softer domestic consumption, that's really bad. Inflation forecast is slightly lower. This is really bad for the currency. Short Australian dollar. Okay, at least I'm not saying for forever. Okay, I'm saying that for this trade, or even like for Australian Japanese yen, let's say, short here as well. 11.30. When was that? 11.30 here. So 11.30 went all the way up, and then here you waited there, and then you would short that. Okay, so Australian dollar again. What else? Aussie CHF. Short Australian against the CHF. 11.30 was here. Okay, so again here. So I'm just saying there was plenty of moves that you could be done. Okay, and that's what I mean by trading is smart. Leverage that type of technology into your favor. And knowing where to find the information is really important. Okay. Always go to the source. Always go into what really matters. Okay. Because, there's somewhere around that's going to send. No, it's public. Go to the website from the central bank. It's what is giving you the information for free. Why do you want to go to other places, so there's no real sense for that. Okay, cool. So that's my opinion, and hopefully you guys could understand a little bit more about it. And we can wrap up for today. Cool. Any more questions? Does anyone have any questions for that? No questions? You guys sure? Okay. Opa, we may have a question. Let me have a look. I do. Yeah, go ahead, Switz. So in summary, AUD is weak now. That's correct. And another point that we can have a look on that, if my prime market is on, most likely I'm going to have to do. Let me just type it up my email here. Okay, cool. So if we look at the currency strength, there you go. Why is it not going? Okay, cool. Just looking at the chat, Sam asked, do we need to copy and paste? The simple answer is no. We don't need to copy and paste, and that's correct. What you say, AI can just come and take it if you explain the date. But I prefer to copy and paste just so it doesn't have any errors. Okay. All right. So this is when the release happened. Okay, so right at 11:30. So this is 11 to 12 today. After that, we had all of this move down. Okay, so Australian dollar has lost a lot of value, and if we look, US dollar is very, very weak. So just so you know how bad they have been selling the Australian dollar this morning. Euro is very, very strong. Okay. Japanese yen is very, very strong. The pound is somewhat around the Australian dollar. CHF is as strong as well. Canadian dollar is very weak, and the New Zealand dollar is very weak. So basically, Euro, Japanese yen, and CHF, they are the strongest ones at the moment. And this is just showing how the flight to safety is happening. Okay. So let's say US dollar Japanese yen, for instance, we had this little up move here, but right now it's already pulling back because if we look, let me take this all off. The US dollar is down here as the Japanese yen is up there. Okay. So it says because the chart seems to be accumulating liquidity below the range that's currently at now. Which one? Australian dollar against AUD, you mean? Sorry, against US dollar. Also, how far do you think it could go? Could NFB pave way for it if it comes out better than expected? For the Australian dollar, you need to have two views because first view is, and I've just shown you, the US dollar is really bad. The Australian dollar is actually stronger than the whoopsie. Let me just reload that. Okay. So the Australian dollar is a little bit stronger than the US dollar at the moment, okay? And you can see this. It's regaining somewhat of its strength, okay, the US dollar, but I don't believe that this strength will be able to send the USD all the way back down to somewhere around levels like here, okay? Most likely we will continue to see maybe 66, even 68 by the end of the year, okay? So it's still a good option to look to long Australian dollar against the US dollar, especially around those levels here, okay? My best rate is GBP AUD for now. That's really good, Aditya. Congratulations. Oh, I get it now. I was off chart for about a month. Yeah, that's fine, Sweets. Okay, guys. Well, that's pretty good to have a chat with everyone. I love to when you guys ask me questions. It's pretty good. And hopefully now everyone is with clear head for the week ahead. I hope I could help everyone as well. All right, guys. Thank you. Have all a great day, great week. Just depends how everyone goes. And if you have any questions, please just let me know how it goes. Thank you all, and see you guys later. Bye-bye.